Good. Good evening, guys. I hope you guys are good. Good morning, colleagues. Good morning, future billionaires and future millionaires. Tonight's session is all about weekly analysis. We're just gonna go through some analysis for the week. We're gonna be looking at some few pairs, and if you do have any suggestion in terms of which pair we should be looking at, don't hesitate, to write them on the chat box. We've got Pumlani on the session. Welcome, Pumlani. Hope you good, my brother. Hope the Sunday and the weekend was good and you were safe. Okay. Do you have any charts you would love us to take a look at? Because it's a Sunday, we're just doing some weekly analysis, and it's not a class, it's just us doing some analysis. Just a disclaimer, remember everything we talk about in this session, it's not a financial advice. So do not take it as a financial advice. It's simple for educational purposes. Okay? It's for education and it's me. I'm just sharing my view, my analysis. So it's not me saying the market will do this. It's just my view, my analysis of what of the possibilities of what the market might do based on my strategy. Another disclaimer that I want to add is, remember, trading is not for everyone. So just be very cautious when you trading, especially in the forex market or even in the crypto market. You have to be very diligent and you have to know what you're doing. And remember, forex, crypto, indices, oil, commodities, all these instruments, they are very volatile. So just know before you jump on them, you know exactly what you're doing. With that disclaimer being said, I am Mr. President Wonga. Welcome to Sona session. It's the 16th of March, 2025. If you do have any pair that you love us to take a look at, please share on the chat box. All right. I think we had a session on Friday. The session on Friday, I think we did take a look at GDP I'm gonna mute. I think there is a bit of a back noise feedback from Lani. All right. Okay, I think we did take a look at GDP on Friday, and this the expectation on it. And obviously, we look at this. This is nice. This is good. So basically, this is the high, and this is the low, and this is some form of a support. And the price broke support here, and the price broke support here. As you can see, the price broke this level, and it went all the way down. So as you can see, the market has been on the downward trajectory from this point here. But now, as you can see on the other side now, after touching that base, now the price is coming back to the upside. What I normally do is, firstly, I go to the Fibonacci and I check how much retracement has happened. And you can see even here on this side, you can see on this side is between the 61, it's just above 20.8. And you can see even this side here, the base, when I say the base, I'm talking about, and this point here, all right? I'm talking about this point here. My connection. All right. So I'm talking about this base here. So this was a drop. So a drop from there. Just show you what I mean. So this was a drop, and then this is some of a base, And you can see here, price is basically like a forming, like some sort of a ranging. So a ranging market is where the market is moving between two price points, And yeah, so from the market move to two price points. So I will expect the market to react looking at your right, coming from, this is your left, looking at your left. So this was some form of support. So I expect the market to react on this side here. And also because this is like a base. So this is some sort of a base. And this is also where the market, this is support and there's some sort of a resistance. So this is like a SR flip, in some way. It's also a level of supply zone. So I will expect the market to do this at this level. So When it comes to this point here, I'm expecting to come there and then reverse to the downside. Let's just check how many pips. And you can see even here, once you see that the market is actually giving us this compression. So a compression is where the market, you can see now, it's not moving aggressive to the upside, it's just moving sideways. So what normally will happen, they will give us a spike to the upside, touching the level of supply, and then a drop. So that spike, we can call it like a stop hand. So if you can mark from this level here, so I'm not sure. So from here, it's roughly about close to 200 pips. And then from that level, from that 200 pips on the upside, expecting another drop of over 300 and 300 and 250 pips. Okay. Yeah, 300. 300 pips, maybe 325 pips. So this is the level where I will expect the market to come back to. All right. And you can see here, this is a flag. Here, the market will touch here and touch this level and actually push up. All right. All right. Okay. Okay, and then another pair that I was looking at, is also gold. I think this week we've been watching gold, what gold has been doing. It's been moving aggressively, okay? So if you're looking at gold, my expectation on gold, for example, and if you go and check gold, you can see what it did here. It formed some sort of a double marrow. So a double marrow is, as some people call it, a railroad track. It's when this market, so you can see here, the first candle was bullish, and then the second candle was bearish. So this is some form of an M pattern. Okay. So once that pattern has been formed, what I will normally do is I will expect, for example, you can see even on this point, let's just zoom out. Okay, so this level here is where there was a break to the upside, and this is basically 2950. So breaking outside and forming a new high. So let's just go to the I think this is much clearer now on this. Yeah. Okay, if I draw a channel like this one here, okay, and I draw a channel like this, and this is the first zone that is critical, where you might find some reaction, So chances are the market will move in between here, okay, and it will drop towards the zone 2971 and move to the upside. So the upside can be 3031 USD, possible, maybe make a reversal to this level and further movement to the upside. Okay. All right. So that is a view on gold. Maybe try and see something once again. So this is my view on gold. I think I did share it on Friday. That what happened is that you can see the market move towards this level, and it formed like a first shoulder, then moved to the upside. It formed the head, and then came back here, and it formed another shoulder, and then expecting a drop. So the first point where it can react is this level here. Is this level here. If you understand price action, you will know the market more likely to react on this zone. So that could be the first zone where the market will react. So 2970. So for it reverting to that, let's just check in terms of, I'm gonna take from this level towards that level. Yes, so taking the high, you can see even that level is around 61.8 in terms of the Fibonacci. Okay, so that is 61.8 and 50. So that is a level 29.69 and 29.65. So I will expect the market to go further up. Chances are I may go to 3,031 USD and then possible another drop towards the 29.50. And we said before, if you go and take a look at the higher time frame, you can see this was the, and look at this candle. Nice bullish hammer. If you don't know hammer, this is a clear hammer for you. And if you draw a line, horizontal line, you can see that hammer is right at the top. You know, right at the top. Right at the top here. Right here, you know. And it's just a clear sign that this thing here is right at the top. Okay, close above, move above, very nice bullish momentum. So that is my expectation on gold. My expectation on gold. And then maybe another pair we can have a look at is Bitcoin. There was a lot of talks around Bitcoin. Maybe we can take a look at Bitcoin. What is the Bitcoin actually doing? What is Bitcoin doing? Okay. First, I like to go on a higher time frame. I think I did share some analysis on this pair before. So the first thing that I normally do, I change this into a line chart. So I can mark my highs and I can mark my lows and I can mark this level here, you know, at this level there. So I change into a normal chart and you can see from this zone, I think we did, if you've been following the analysis on Telegram, you'll see that this here was posted on Telegram and the market broke above this level and it came back here. Okay, so expectation, this was the first time it came back, retest, and now it's here. So I'm definitely expecting the Bitcoin to retest that zone once again. Okay, let's just zoom in. Yeah, definitely expecting Bitcoin to retest that level once again, you know. Yeah, so that is expectation on Bitcoin. And you can see even here, it started forming okay, so this is what's happening on the bigger time frame. Okay, so let's go on daily. It's clear it's bouncing off this level of supply. So if you go on a smaller time frame, you can see that the Bitcoin has been touching these levels here. So from there, okay, let's go on 4 hour. So I'm expecting Bitcoin to touch this level and come back here and then make a move to the upside. Okay. So remember, tonight's session is not really it's not really a class, it's just a weekly analysis. Remember, this week we're gonna have about 4 Central Reserve Bank decisions. So you might see a major movement in terms of Bitcoin and also major movement in terms of gold. Okay. So when the market start moving like this, some of the compression, it means the momentum is low. But before it can make a turn to the downside, it's always gonna make a move to the downside. Okay. But what I'm looking at now, I'm looking at this is H4. There's this base here. Okay. Let me just remove everything so we can yeah. Okay. So if I zoom in on this, you can see on Bitcoin. Remember, we said, I think last week, I said in the last week session, you said there was a drop. Okay, you can see that drop, and there is a base here. This base is when the market is not moving aggressive to the downside or to the upside. It's when the market just forming like a range where the market is moving not to the upside, but almost like resembles as if it's moving to the side, or what we call it a sideways. So from here, you can see the market started moving sideways. And if you push that to the side, you can see now there was a first reaction, second reaction. Chances are the market can tend towards this zone here. So I might just expect it to come back here. All right. So touch that level of a base, then drop, and then push towards the upside. Okay, and push towards the upside. Remember, the reason I'm saying it will react to the base is because it's a drop base drop. So when the market touches a level, more likely it will, because this was a base that was formed, and after the base there was a drop. So when they come back to the same base, you should expect similar. That is what I'm looking at in terms of Bitcoin. All right. That is what I'm looking at in terms of Bitcoin. But remember, this session, I've said before, the Sunday session are for analysis. If you've got a pair that you want us to take a look at, it's those days where we can actually go and have a look at that pair. All right. And if we go and look at the daily charts in terms of what's been happening in terms of the indices, especially US 30, it's been hectic. A lot of talks around recession, but I think we saw last week the inflation numbers dropping. With the inflation numbers dropping, it might possible may not promote the cards that a lot of traders or investors are looking at. So that may be a pause in terms of cutting rates. And you saw that, okay, looking at this, USD reacted on that hammer, and that hammer is on where? On the daily, and it's also on the flip zone. I say flip zone is where the market broke above a level. So this level here, this is the level I'm talking about. So the market broke above this level. So it broke above here. So there was a bit of a push of a stop hand, and the market push above. Now it coming back to the same level, and then a push towards a similar level. So chances are, let's go and do a bit of a zooming in. Okay, let's first start on this here. So remember, daily charts is where we do our direction. It's where you set our TP. So I'll change this into a line chart so I can mark the zone that I'm looking for. So if you if you're looking at that, you can see that zone it resembles some sort of a floor, okay? Because the market came back here and the market touched a similar level and it went up and again touched this level and went up. And now here it broke. So this is where it actually broke. It broke below that floor. It broke below that floor. Okay. So now with the market breaking below that floor, it's if you look left, remember we say when you do analysis, we look left. Okay, let me just use this. Okay, so you can see that is the first point, and again that is another point, and it came back again here, so it touched below, and then it went towards this zone here. Okay, towards that zone there again, towards that zone here. All right, so now it coming back again, touching this level here. So I will expect, let me just remove everything so it can be clear for you. Okay, so I'm gonna mark that level where there was the reaction like this. Okay, I'm expecting a reaction on that zone, that level. So now, which is like a base here. Okay, so expecting this to form, and on the downside forming some sort of a W, then the market move towards that area. Okay, that area, I'm gonna mark that area. And if you go on 1 hour, okay, it's not giving us what we want. 1 hour, 30 minutes. And my network is better. Okay, let's just stick on daily, 1 4 hour. So that is my expectation on US debt. Okay. So that is my expectation on US debt.